And welcome to the Lions Share, where we talk family, faith, football, finance, and fun. I'm your host, Mitch Lyons. This episode, as always, brought to you by Mitch Lyons Wealth. Check us out at mitchlyonswealth.com. Hey, and don't forget to like and subscribe to this podcast if you find some value here. Today, we've got an interesting guest I think a lot of people are going to be interested in hearing about because it's a way to find some money, and you'll find out what I mean by that. I'd like to bring or introduce Mrky from Life Settlements Inc. into the podcast. Welcome, Mark.
Howdy. Appreciate you bringing me on to talk a little shop today, Mitch. Absolutely.
Yeah, no, it's great, and we're excited to learn a little bit about what you do because I think it's an unknown quantity to a lot of people out there. And what we're talking about are life settlements. I guess we'll start from the top and just go through the basics. Explain to the audience what a life settlement is, because I think there's probably a lot of misconceptions out there.
Yeah, sure. Our industry, I'll go back to our beginnings. Our industry started in the 90s, and it was what was coined a viatical settlement. And I think a lot of people understand that term. But this was back in the 90s where clients that were afflicted with HIV and AIDS were selling their policies. And there were usually much smaller policies. The offers back then, unfortunately, if you had HIV, it was somewhat of a death sentence. So those clients were selling their policies to a few buyers that existed in the industry. Well, all of a sudden medical advances took place, protease inhibitors that prolonged the lives of those clients that had HIV and AIDS. And you had some really smart bankers, CNA, Viaticus, that say, wait a second, if we can do that for individuals that had these very shortened life expectancies, a viatical settlement, pure definition, is if you have a life expectancy under 2 years. Well, they said, hold on, let's create this industry called life settlements. And we can do this for older insureds. We can do this for folks that are 65 and older that own a life insurance policy of $100,000 or more. And if they're one of those, and these are real numbers that I'll quote to you, 500,000 individuals that let their policy lapse or surrender every year, why don't we help them out? So our industry kind of really sprung up in about 2000. I joined this industry in my firm in 2001, and you still kind of had to explain the difference to people that know viatical is for a different clientele. It's for someone who's really a very short in life expectancy, but a life settlement is now for a client that's 65 and older. They've come to this conclusion that their life insurance has served its needs. They bought it when they're in 40s or 50s. Their kids were younger. They wanted to protect their family. They wanted to protect their business. They did it for estate planning purposes, whatever it was. Well, now they're in their 70s. They're in their 80s. They're staring down at their policy saying, well, maybe we don't need our policy anymore. So do we have an option? And that's what the secondary market for life insurance is. A life settlement is simply saying, hey, you can now sell your policy to an institutional investment group. I see ads on television for an amount that's significantly higher than what the carrier's cash surrender value is. So that's kind of the history of our industry.
Yeah, wow, 500,000 policies, just being given up, so to speak, right? And that's a win, that's a win for the insurance company because they've taken premiums all those years and never had to pay anything out. But if I'm understanding you correctly, a lot of those policies could have been, there's value there. It's an asset, no different than your stock bond portfolio, your house, your real estate. It's an asset that you have, and a lot of people are letting that value go right down the drain without getting a free appraisal and seeing if it's maybe worth something.
You're doing my job for me, Mitch. You just hit the nail on the head. Clients don't understand that their life insurance is an asset that has real value today. Everyone buys life insurance and just think, well, someone's going to get that death benefit, my beneficiary. Well, again, fast forward to my industry, we now look at policies and say, hold on, we can take a look at your mortality, your life expectancy. And I know that's kind of a morbid thing to discuss. But if you're looking at selling your policy, a life settlement is probably one of the most comprehensive things you could do to make a decision to sell the policy or perhaps not. And what I mean by that is you sit down with your client, we do collect medical records, we do assess life expectancy reporting, and then we put a life settlement offer together with all of the buyers that exist in the life settlement industry. I am a life settlement broker. What I do is put all the buyers in the same room, I have them fight it out. Once I have the last man standing, I say, okay, Mitch, here's your high offer on your client's policy. Let me know if they want to sell it. But now you can sit down with your client and say, hey, well, we did a life expectancy study. Kind of morbid to talk about, Mr. Jones, but you've got 10, 15, 20 years to live. Well, here's what 10 or 15 or 20 years of premiums look like. Here's your cash surrender value over here from the life insurance carrier, and here's your life settlement offer. What would you like to do? So now the client really can sit back and say, all right, should I sell the policy or maybe not? And there are instances where the client says, hold on, I have a shortened life expectancy. Maybe I do want to hold on to the policy, and that's all right. That's completely fine. I tell folks our industry is kind of that last stop before you've gotten rid of your policy. As I mentioned, there really is about 500,000 policies that end up in lapse or surrender every
And
year.
to be clear, these are not just permanent policies. There's value in a term policy as long as it's convertible, correct?
Yeah, I'm glad you said that. Really, it boils down to two types of policies in my industry. Whole life policies, great product, in my opinion. I don't sell insurance, but it's a great product. Why do I say that? My industry doesn't buy it. It does not buy whole life that much at all. Typically, whole life's a little more expensive. You have high cash surrender values. That's what the buyer has to beat. What we see in my industry is convertible term policies, which is a shock to people. They're like, what? I can sell my policy that's a term that's worth zero, we know. The answer is yes, as long as it's still convertible. That's what's so important to clients, advisors, whoever your audience is. If you have a term policy, make sure you look to see when that conversion period ends, because 99% of the time, a term policy owner will let the policy go for zero. That's a fact. Along my industry comes is hold on. Well, if it's convertible, a buyer may want to buy it from you. That's about 20% of our industry is convertible term. The rest, universal life that simply has not performed to expectations. And there's some great universal life policies out there. Don't get me wrong. I never want to pick on the insurance industry. It's an outstanding option to have. But all too often in my industry, we just see policies that clients took out. Maybe they didn't fund them correctly. Maybe the policy just didn't perform at the rate they thought they would or it would. And now they're staring at their statements. Says, all right, I have this $1 million policy. I pumped in 200 grand. My cash surrender value is zero. They're not happy. Probably read the article about Kyle Busch recently.
Right, right.
He's not happy. Now, is he a
Yeah.
client for my industry? No, he's too young. But of all those policies that do lapse or do surrender, if you're a client, a financial advisor, you really need to make sure that your clients understand this option. And we were talking earlier, Mitch, I have the latest data report, life settlement by the numbers, and I'll read this. This is 2024 data. This is consumer impact. The average cash surrender value of a client who brought their policy to a life settlement broker like me was around 40 grand. That was the cash surrender value. The average settlement, 248,550 to be exact.
Wow.
You want to talk about a powerful statement to your client. Your client's getting ready to surrender their policy for 40 grand. You say, hold on, time out. Let's pump the brakes. Let's look at a life settlement option where you can sell it to an institutional investment group. The average life settlement produced 6 times the cash surrender value. So that's my industry.
I would say that's probably worth taking a look at.
It is. And if you're a financial advisor and you're not familiar with insurance, that's okay. We've got experts on our team that can help you assess the policy. We can help you put together a life settlement offer, of course. And now, again, you can sit down with a client and say, look, you have option A over here, your cash surrender, option B, your life settlement offer. Option C shows you how long you should pay premiums based on mortality. And then you have another option called a retained death benefit in my industry. Instead of giving a client a check, they actually can keep a portion of their policy. So the buyer will take the policy over, pay all future premiums, but the beneficiary still gets some of that death benefit. That's called a retained death benefit.
Okay. Yeah, I look at this opportunity. You think of assets that people don't consider. I just have a reverse mortgage in mind, right? People buy a home and they've got this equity trapped in their house that they really can't utilize for their retirement. But boom, you can if you utilize a reverse mortgage. And this is kind of the same concept. You're taking an asset that maybe you don't think of in terms of being able to help your retirement or give you liquidity. And to your point on the convertible term, I mean, I always, term is often positioned as you're renting insurance for a specific period of time. But if it's convertible, that's a lease to own, so to speak. You can turn that into an ownership play and get some cash value out of it, whereas your typical term has no cash value.
Correct. Yeah, you hit the nail on the head. Like I said, I mean, your life insurance is an asset that has real value in what I call the secondary market for sure.
So let's go talk a little bit more in depth. I know let's mention some of the maybe the life events and whatnot that would lead to people not needing life insurance anymore, just to kind of spark some thoughts for people out there. Obviously, divorce. Kids have gotten older. Maybe just the need for the insurance has, you just don't need it. Maybe about a 30-year term 20 years ago, and you're 65, and you don't need it anymore. Maybe you're health's declined a little bit, but you're not that, interested in leaving a death benefit per se. But what are some other examples?
Yeah, you just hit the most popular ones. The same reasons that people buy insurance, protect their family, protect their business, estate, issues, whatever else I'm forgetting here. The same reason why they buy insurance exists for why they sell it. You just hit the nail on the head that your kids grow up now, they're whatever they are, they're successful individuals in their 30s and 40s, and mom and dad say, hey, this insurance is getting a little expensive. And the kids say, mom, get rid of it. We're fine. You're selling a business. I see that all too often where a key
Yeah,
man
with
policy exists
mhm.
and the owner of the policy is maybe in his 60s or 70s or 80s, doesn't matter. And they say, well, selling the business, I'm retiring. Let's just take this policy over here. It's not needed anymore. And those are outstanding opportunities. We had a $10 million term policy on a key man executive. This goes back 3, 4 years. My favorite case to date still. It was a $10 million term. Client was 73, selling his business, didn't need the term anymore. It was still convertible, like literally for another week. We rushed through the settlement process, got it out to all the buyers. Instead of the client surrendering for zero, again, terms were zero, he got 550 grand. That's on a term policy. Again, he was an
Wow.
executive, he was retiring. And the great part of that equation is he sat back down with the advisor, and I believe the advisor wrote him an annuity. So you look at that transaction, went from zero to 550 grand in the client's pocket to selling a new product through that advisor. So, but yeah,
And
selling a
putting that
business.
putting that client in a better position, obviously. It's 500 grand found money, so to speak, like we talked about at the beginning of it.
Correct, found money. But yeah, the
Yeah.
kids grow up, you sell a business, you get divorced, you're not required to hold insurance anymore. Declining health. Now that kind of shocks people sometimes. They're like, why would someone want to sell their insurance if they're declining health? I see that I got a call yesterday. I almost get emotional on these things that the lady had breast cancer. She has a $750,000 policy. She has less than 2 years to live. She said, Mark, I want to use it for my family. And I'm tingling right now because these situations,
Yeah.
they pull on your heartstrings, but she wants to sell her policy. So we're literally in the middle of evaluation. And there's probably a very good chance the offer we're going to give to her is going to be somewhere 400, $500,000 on a $750,000 policy. And again, she wants to use the money now. She wants to use it for medical care. We got into some other things with her. And I said, absolutely. I said, if you really want to sell this, we'll get you a very, very strong offer. Now it's just a matter of sitting down with your family and deciding, do they want you to sell it as well? Because that's something that, everyone that's attached to the policy, the beneficiary, if it's a corporate owned policy, a trust owned policy, they'll sign off on this transaction. So if the insured wants to sell it, everyone else who's attached to that policy is also going to want to sell off too. So
So, you see these advertisements on TV, not, Coventry,
oh,
Abacus, these companies offering, life settlements.
mhm.
Walk us through, why maybe it makes sense to use your services versus just going to one of these companies that's advertising.
Sure. First of all, very good firms. They're two of my largest partners that I sell policies to. But I equate it to a real estate transaction like this. Number one, in the life settlement industry, those ads that you see on television, those are from buyers. They're called providers. Now, every state has a dozen or so of those providers, and each of those providers have a dozen or more underlying funds that can purchase a client's policy. So as a broker, what I do is say, okay, let's put all the buyers in the same room. Let's give all the buyers the same information. Let's all of them do their own underwriting. And that's the biggest difference when you look at a life settlement offer that goes from good to great is each buyer, like if you buy life insurance, you go out, you do a medical exam, and you get a rating. Well, the carriers all give you different ratings and different premium streams. Same thing exists in a life settlement offer. Each buyer is going to look at a client's medical records and come up with a life expectancy. And one thing I can guarantee you on every case, if I have 12 buyers looking at a case, all 12 of them will have different life expectancy reports for sure. Typically the one that shows the lowest life expectancy is probably going to have the highest bid. So those companies that you mentioned, they're outstanding companies, don't get me wrong, but sellers, financial buyers have to realize you have a dozen or so of those buyers out there. So unless you put them all in the same room, you can create a competitive bidding environment. You got to remember, they're trying to buy your client's policy for their best interest. The underlying fund, the hedge fund, the pension fund that they represent, they're trying to buy it for that fund's best return. A broker like me says, no, let's put all you in the same room. Let's give you all the fair share of the same information and see
Yep.
who really wants to pay the most for our client's policy. So that's the difference that you see from a provider where you get one offer to a broker who's going to give you 12 offers and let a bidding scenario take place.
Sure. So if I'm a listener out there and I think, geez, I think I fall in this area where that might be beneficial to me. I'm over 65. Maybe I'm not in perfect health. I've got this old policy that I no longer need, or I don't want to keep paying the premiums on. What does it entail to get that free appraisal? What is a client looking at? What the time frame and hoops that might have to jump through to see what people would offer them?
Yeah, good question. Our process takes about 4 to 6 weeks, and it all starts with a phone call. If an advisor or a client, whoever calls me, I'm going to ask them four simple questions. How old's the client? Is it 65 and older? That's our marketplace. I ask them a little bit about their health. Now, obviously, the more unhealthy a client is, the shorter their mortality, the shorter their life expectancy, the higher their offer. So I want to know a little bit about that. And then I want to look at a policy illustration. I want to see what the premium stage 100 look like. I want to see the cash surrender value. And from that short phone call, it's either going to be, hey, you've got a great client. Let's get an application in their hands. And if that's the next step, an application is sent. Probably takes the client all of 2 to 3 minutes to fill out. What they're filling out is their name, their address, their doctors for my firm to collect medical information. They do sign a HIPAA authorization. My industry is very regulated. I have to operate under the HIPAA guidelines. So I do collect the last 5 years of their medical records. Clients do not have to go to the doctor. They do not have to take a paramed. They simply sign the application. It's returned back to me. I usually have the advisor run a policy illustration to age 100 that's current. And that's the information that we compile: application, medical records, policy illustration, and that's sent to a dozen or so buyers. And then a bidding scenario takes place. And I can tell you on every case, all bids all start out at X and they get to X plus 10 or whatever that is. Because again, the buyer's trying to buy it for their best interest. So you have to let this bidding scenario take place. But it takes me about a good 4 to 6 weeks to put that offer together. Once I have that high offer, I call my client, I call my advisors. Hey, good news. We had 12 different buyers. The bid started at 100 grand. They ended at 550 grand. And that's that's very common. Here's the high offer. Go down and sit down with your client. We're going to share the mortality with you so you can really give them factual information to say, hey, here's what your premiums look like if you live 10, 12 years. Here's your settlement offer. Here's your cash surrender value. What would you like to do? If the client says, yeah, this is great. I don't want my policy anymore. I don't need it. I can't afford it, whatever it is. They now enter into a contract with the buyer that allows the buyer to purchase the policy from the insured. That closing process takes me about 2 to 3 weeks. You basically are changing the ownership at the carrier. That's really all life settlement is. You're saying, hey, I own this policy. My name is Shirley Jones, Mitch Lyons. I'm selling it to this company over here in exchange for a cash offer. So start to finish, call it 2 months from the
Yeah.
offer in your client's hands to when they get the check in their hands. It's about a 2 month
So
process.
similar to getting life insurance in terms of the underwriting process without having to actually do a medical exam, which oftentimes you do for larger cases and insurance to
Correct.
obtain life insurance. So one more thing I'd like to touch on, just so people have a good understanding, you know, and I think that the industry, when viaticals first came out, and certainly now with settlements as well, people think of the fact that, oh, geez, now some third party is going to own a policy on my life. Let's talk through that and talk about who those third parties are, and really, it's just a math problem. If it's an investment, they don't need you to die. They don't need to knock you off from Joey on the street corner or whatever. But maybe walk the listeners through that and who's actually buying these policies and why.
Most important question that you just asked. I always want my clients to know who is buying their policy. In my industry, if you turn on the television, you got one company on there that's a publicly traded company now. You got another one that's been in our industry since the inception. These are large institutional firms, accredited investment capital, family office capital. These buyers buy these policies. The policy goes into a portfolio, and that portfolio pays a return over a time, whatever that time period be. Typically, these buyers are buying policies on insureds that have life expectancies under 20 years, but really you're nothing more than a name and a number inside a portfolio of thousands of other policies. Now, our industry does have smaller, what I'll call private groups that can also buy policies. So we give them all a fair chance. As a broker, again, my job is to show the highest offer. So if it's from an institutional source, which that's 95% of the business, it goes to a large institutional hedge fund, pension fund, accredited investment capital source. But there are instances where a family office may buy it. There are instances where accredited investment group may also buy our policy, but that all is fully disclosed in that
Yeah,
contract.
and really all these institutional buyers are buying non-correlated assets that
Yep.
can diversify their overall portfolio, right?
They could care less about the stock market. They don't care about the real estate market. They're buying this policy based on mortality. and they're buying the policy based off future premiums. And those are the
And
two drivers.
they don't really care about one individual policy, how long that person lives, because they're buying the entire group of policies, and they know the math, right? They know what the average life expectancy is going to be on all of them, and it all, some might live longer than what they forecasted, some are going to live less long, and at the end of the day, they're just going for that IRR, internal rate of return on their portfolio.
Yep, you hit it. My industry operates off the law of large numbers, and I've been doing this for 25 years, and I'm very close to most all of the buyers out there, and they all say the same thing that 60% of the time they're right on the mark. They assess the client's life expectancy, and the client died right when they thought. Now, 20% of the time they're wrong. Client lived 2 or 3 or 4 years longer than what they thought, and that's occurring over and over. People are living longer, and then the other 20% of the time, client dies much sooner than they thought. But the law of large averages kind of takes shape. And if they buy 60% of their policies that they thought the individual was going to die in 10 years and the premium ratio was 4%, they're going to make their internal rate of return, which on these portfolios, it can average from 8% to as high as 18%. So every fund is a little bit different on what IR they're trying to achieve, which that's another factor that a broker brings to the table. If I've got a fund that's pricing a deal off of an 18% internal rate of return and another fund over here that's pricing off 8%, 8% is winning all day long.
Yeah, he's gonna be offering a higher amount.
Yeah. Yeah.
Well, that's awesome, and great information. I mean, I think just it's an area that people are not familiar with, and
Yeah.
I think it's great, that you're shedding light on that. And I appreciate you coming on and sharing that with our listeners today, Mark. And I'd love to talk further down the road and help people find money, so to speak. So
Absolutely.
in folks, if you have any interest in this, if you've got a policy like that, feel free to reach out to mitchlyonswealth.com. We partner with Mark and his group life insurance settlements, and we'd be happy to just investigate to see if it might make sense to go down that path. And like Mark said, it's a pretty easy process to find out if there might be a possibility there, and if there is, great, let's throw it out there to the highest bidder. And not that you have to move forward, but at least it gives you another arrow in your quiver to figure out what your options are. And again, there's no cost to do that, in a pretty easy process, that sounds like.
Yeah, it's as I always like to tell folks, what we do is a free, non-binding appraisal of this asset that you own, which is your life insurance policy. And if you want to sell it based on our appraisal, great. And if you don't, hold on to it. Because I usually tell folks that you're probably not going to be a client for new insurance if you enter into a life settlement. So make sure that if your policy has served its needs, a settlement should be something that you always look into. We're very heavily, we have 48 states that now regulate life settlements. They put some information in somewhere in the back of their surrender forms that say, hey, a life settlement's an option. But unfortunately, our industry's still not at the point where it's an option that every financial advisor, every client is completely aware of. So I appreciate it, Mitch. Anytime I can come on and talk shop about my industry, I'm always happy to do it.
Awesome, folks. If you enjoyed this content and you'd like to hear more, hey, like, subscribe, hit the button below, and join the Lion Share podcast group, and you'll be notified every time we have great guests on, like Mark. Mark, again, thanks again, and appreciate your time.
Thank you, Mitch.